Our assertion that the 25.7% drop from around 42k to trading at its extremist point low around 30.5 is the new 38k, as per our suggestion here on the last bull markets, where 38k pullbacks were typical. Part and parcel of the next cycle. It's going to be more representative of institutions getting in with the pullbacks being smaller. So 25.7% pullbacks is the new 38% in our view, was what we represented last time. This little key break, reason for the update is there's a key break that's taking place here. We have, as you can see from my line chart, this is typically what I only show on premium. A very clear-cut funnel level, and we've resisted for a while here. Couldn't trade above, couldn't trade above, couldn't trade above all of today and some of yesterday. Squeezing up against this level. Typically when you have a level like that, you break it with momentum. That doesn't mean we can't, once we say touch the 36k, have a little bit of a pullback. You could even pull back all the way to rest on this level and even dip into it and support in it for a while. That doesn't mean that will necessarily happen, but my overarching view is that we are going to grind our way back up this red line, something similar like this. We could square up through it as part and parcel of maybe slowing down a little bit, but that the risk of the head and shoulder that I highlighted in the previous video, but also downplayed as being predominant. A lot of people were putting out head and shoulder draws and saying next stop 20k, and our view is that that's less likely to occur. That's less likely to occur. One candle does not cancel that, breaking above that, but overall the dimension of the shoulders typically are more volatile on the right, often lower, and take less time to set up. That is my primary experience. That's not 100% rule. It's not, oh, you can't have a broader by time frame right shoulder and still not have a performing downside head and shoulders. It's just less likely. So if you use the measuring tool over here, this shoulder effectively began with the upside break of the wedge. For me, it ends here on that spill around 46 bars. Even if we extend it to the secondary low in terms of time frame, we get 66 bars. If I go from here to where we are now, we're already at 50 bars, which surpassed the time frame on this one, which was just the 46. So we've already spent more time right shouldering, even though we don't feel that's a right shoulder. And if we take the secondary low sell-off, which I think you could still have here, a secondary low sell-off that doesn't make as deep a low. So part and parcel of all of this could see you rolling through, trading through this red line, and even having a wee stab down. This is quite steep gradient. So it's not necessarily going to just go straight into melt up from here, whilst it could do. I think the buyers will come back more slowly, tenuously. It was a decent hit, 25%, and some people were certainly scorched with that. So squaring up and coming around will just continue to burn more time and set consolidation, dissipating the selling momentum and making it more like that is the final move to the downside. That's my key message. I don't want to make this a particularly long clip. It's a quick update. You've broken with momentum. As I say, you can follow back, and you could even retrace and sag into these lines. So there you go, a couple of levels that are all HVF specific that we typically draw, that highlights some of the key aspects of the method. And good news, or better news, let's say, I expect, and further undermining the threat of the head and shoulders, which many have featured on Twitter. Okay, that's it from me. The others should follow. Bitcoin often leads. I do still feel that later on, once the alts follow, Ethereum could have a period of relative overperformance. But I think for the recovery, again, the lead steer must move first and must substantially clearly indicate that it's moving. It wouldn't surprise, as I say, that you fizzle back and you could even square up out of it. But what this doesn't change is the fact that even if we're still trading in the 33, 34 zone later on tonight, even if this pulls back through that level, the concept is the head and shoulders needed to start rolling over to the downside. How does the head and shoulders come back into possibility or flavor? This entirely fizzles. We get a massive loss of momentum and we spill through this lower level line and we come deep into the 33s, low 33s, and then hovering the 32.6, and then have a run for it down to what I would consider a working neckline in and around the 31,500. So any sign of high momentum, a breakthrough that could indeed flag that you go back to the possibility of the head and shoulders. But so far, a little up move, a little bit encouraging, small green shoots there. If it hangs on to some of it and bides some more time, squares her up, messes around a bit, stays in the 35s and upper 34s range, and even the mid 34s, and draws out the time and the clock, the likelihood of the head and shoulder dissipates. Okay, thanks for watching. We've actually kept a short YouTube for once. Like and share, we appreciate that, and we'll catch you later. Bye for now.